Open banking has moved past the initial phase of simple API compliance. The infrastructure is shifting toward Agentic AI, intelligent systems capable of automating complex, multi-step financial workflows that previously required manual intervention. Running these autonomous systems securely requires three structural pillars: enterprise data management and governance, EDMG, the domain agent model, or DAM, and the PACE framework. This three-tier stack provides the technical framework to ensure that, as a bank scales its automation, every action remains grounded in verifiable data and operational trust. The first step in this architecture is calibrating the system to the specific regulatory environment of the region. In the UK, the CMA mandate created a standardized environment that now supports over 12 million active open banking users. Brazil followed a similar mandatory path, integrating open banking with its PIX payment system to drive massive transaction volumes and expand financial access. Singapore, by contrast, used a market-led approach. They built the SG Findex platform, using a national digital identity system to facilitate secure data sharing. A resilient architecture must be agile enough to handle both the strict requirements of a mandate and the voluntary standards of a market-led system. Intelligent systems rely on the quality of the data they consume. This makes enterprise data management and governance, or EDMG, the mandatory foundation for any AI deployment. The EDMG layer acts as an active filter, validating data and rejecting unauthorized attempts. By verifying consent and establishing clear lineage, it ensures every piece of information is traceable to a legal origin. This data-first approach provides the auditability needed to manage liability and verify compliance before the AI ever acts on the data. Using a single, massive AI model for banking operations creates significant auditability risks. The domain agent model solves this by breaking workflows into specialized teams. For KYC orchestration, you assign atomic roles: one agent to process documents, another to check sanctions, and a third to verify compliance. These agents collaborate in a sequenced loop, using open APIs to process the necessary data and autonomously onboarding a customer in real time. Isolating these banking tasks into microservices makes the entire operation more secure and easier to audit. Generic language models are unconstrained by default, which is a liability in a regulated financial environment. To build boundaries around these agents, we use prompt engineering architecture cards, or PACE. This dashboard illustrates how a PACE card slots into an agent's logic. It explicitly defines its role and the rules it is prohibited from breaking. An affordability agent's PACE card includes hard-coded rules, preventing it from offering a loan that exceeds the thresholds defined by banking regulations. PACE serves as the translation layer, turning subjective regulations into objective, enforceable code for the AI. Once the internal architecture is governed and secure, the focus can shift to external growth. This allows for embedded finance, the ability to project your banking services directly into non-financial platforms, like a loan module inside a rideshare app. Scaling these offers requires access to broader open finance datasets, including insurance, pensions, and investment data. By embedding services where the consumer is already active, banks remain central to the transaction, rather than being displaced by fintech competitors. Successfully integrating the EDMG, DAM, and PACE layers allows a bank to operate as an AI-native engine. There are 6 strategic imperatives required to scale this architecture, from engaging with regulators and strengthening data governance to building API-first infrastructure. These steps create a structured path for transforming raw open data into personalized, automated services for the consumer. You can download the comprehensive strategic agentic roadmap to see the full deployment details. The open data economy is accelerating. The banking leaders who succeed will be those who use this architecture to define its future.